In the U.S., stock index futures pointed to a higher open after a jobs report topped expectations on Friday. The U.S. economy added 223,000 jobs in May, much higher than the 188,000 figure expected by analysts. At around 4 a.m. Eastern Time, Dow futures rose 72 points, indicating a higher implied open of 65.79 points. The Nasdaq and S&P 500 futures also indicated a higher start to the session for their respective markets. Dell Technologies is due to release its latest figures before the opening bell. Palo Alto Networks and Copper Software are set to release their earnings after the close. On the data front, there will be April factory orders number due at 10 a.m. Eastern Time. Despite the positive mood, trade concerns continued to linger after U.S.-China trade talks yielded no major breakthroughs. In Asia, stocks closed higher today, tracking gains seen on Wall Street after Friday's expectations, topping U.S. jobs report and shrugging off trade-related concerns. The Nikkei 225 made convincing gains, with the benchmark advancing 1.37% to close at 22,475.94 as most sectors rose. Hong Kong's Hang Seng Index, meanwhile, jumped 1.51% as technology and real estate sector shares led the move higher. Gains elsewhere in the region were moderate, with the Kospi edging higher by 0.36%, and the S&P ASX 200 tacking on 0.59%. The Shanghai Composite edged up by 0.52% to close at 3,091.19 points, and the smaller Shenzhen Composite tacked on 0.09%. And away from the markets and back here in Nigeria, the government is expected to release draft copy of a set of sectoral codes next week through the Financial Reporting Council. With input from operators and wide consultations, consummated market players are hopeful of a nationwide acceptable code. I was speaking to Channel's business producer Temple Ashaju after a roundtable on the subject. The chief executive of Lagos-based Allianz law firm, Mr. Ucheval Obi, sees the codes boosting foreign direct investment.
Establish that compliance with code of conduct, the code of corporate governance, would help to elongate the lives of companies. Otherwise, the companies may die with the current owners. But if you throw sound corporate governance culture into the establishment, owners of the business could retire and allow managers to run the business, and the business will continue to grow from strength to strength. And that is why in most jurisdictions that take corporate governance very seriously, like Europe and America, you see companies that have run for like 400 years, 300 years, 200 years. Now, the founders are no more, but what drives business and what allows for the continuity simply because they predicated it on sound corporate governance. That is a key message. It's impactful. It also adds to the valuation of the company because people will see more value. Investors will be more protected. Their investment will just not be left to the whims and caprices of few individuals who could easily run it aground. Without sound corporate governance, no country can survive in the long run.
What are your expectations from the investing community, SROs, operators, and regulators when this draft code is released?
They will develop more confidence in corporates. Investors are likely to return to the market. Foreign institutional investors are likely to come back, not just by coming in through the portfolio investment, they also will come in with the FDIs, foreign direct investment will be enthroned because they will understand that there's certainty of rules, certainty of practices, things are quite predictable, confidence will generally return. In the domestic setting, the retail investors who are scared stiff about developments in the past in our market would increasingly regain their confidence. And we need to have those retail investors back. And that is what I believe the stock exchange is also working. Encouraging collective investment schemes so that those retail investors who probably may not have the sophistication to dissect and understand the market could now invest through some specialized funds, properly managed by people who are knowledgeable, who understand the mix of investment, and also people who are also regulated by the regulators.
And in Zimbabwe, the parliament has passed amendments to the mining bill after removing clauses that require foreign mines companies to list locally. Mines Minister Winston Chitando had last month promised to remove the requirements, which he said caused a panic among foreign mining firms and were contrary to the government's push to open Zimbabwe to foreign investors. The Southern African nation has seen increased interest from foreign investors since the downfall of Robert Mugabe in a de facto military coup in November. The amendments to the mining bill, which were passed last week, also allows the mines minister, after consulting with the president, to designate any mineral as strategic if it will be in the interest of the development of the mining industry. And after the break, the managing director, Bank of Industry, speaks on the bank's deployment plans for the just raised $750 million. To stay with us.